over the last 2 3 years, we are now seeing regulation catch up. We are seeing more and more interest from Wall Street into launching these products like ETPs, particularly.
Yeah.
And it is quite confusing for the retail investors. They still can't grab that. Okay, we understand Bitcoin is definitely one of the largest, among the largest asset now. Still very below market cap of gold or even the equities. So why this sudden interest in these crypto assets from Wall Street?
This is a market where it shows essentially that we are at a interesting intersection between essentially the early adoption that was retail driven, predominantly for the last, I would say, 10 years in the digital asset space, to now having mainstream adoption. And the mainstream adoption really comes with various formats where people can have access to essentially this frontier technology, which is essentially blockchain and Bitcoin and the long tail of digital assets.
What sort of interest from what type of investors you are having? Are these all kind of Wall Street investors or family businesses, or are there some crypto investors as well?
But there are two, I would say, drivers or forces in this world that justifies the demand for digital assets. So number one is the fact that we are living, and you actually experience that yourself because now you're right now, I believe, in India, but you're actually usually based in Dubai. So we are living right now in a fragmented world with heightened geopolitical conflicts. And there is essentially a need, and you could see that, of course, with the success of gold as an investment for the last 12 to 18 months, but there is a need for a non-sovereign and international and censorship-resistant asset like Bitcoin.
Hello everyone, welcome to yet another episode of Voice of Web3. I'm Sunil Sharma, Chief Editor at CoinGate News. So I understand there is still the war. The war is still going on. We yet don't know when and how it will end, and it is putting a lot of pressure on the assets, including Bitcoin, including crypto assets as well. I hope you are safe. I hope you are right now in cash, as we all say. And I hope that soon we will have some information that will allow the markets to provide a investable situation again. But institutional investors, institutional sentiment is right now at an all-time high. So it is very important for retail investors. It is very important for crypto businesses to understand why institutions are so much interested right now in crypto when the retail sentiment is at its low. So today, to answer these questions and to unwrap the institutional side of things, we have somebody who has been in the space for a long time now. Today, we are fortunate to have him on the Voice of Web3 podcast. So, guys, today we have Eliézer Ndinga with us. He's right now the head of strategy and business development at 21.co, the parent company of 21Shares. Ali sits at the intersection of traditional capital markets and the burgeoning world of decentralized finance. He has been a pivotal voice in institutionalizing crypto, helping bridge the gap for global investors through research driven insights and innovative ETPs. So, ETP is a word you will hear a lot today in the podcast, and we will take Ali's help to help us understand what they are, how they're impacting crypto. Whether you're curious about the macro trends shaping Bitcoin or how tokenization is rewriting the rule of Wall Street, Ali is the person you want in your ear. So, Ali, welcome to the show, and thanks again for joining us today.
Sunil, thank you so much for having me. It's a pleasure to be here.
So, Ali, before we move to more advanced questions, or maybe how the market is trending or how factors are impacting the assets today, it will be a good kind of it will be good for us to help our audience understand that when it comes to crypto, how are these various financial products differentiated? I mean, we hear a lot about ETFs, we hear a lot about ETPs, and we also have these native assets like Bitcoin and Ethereum we can buy right off from Binance or other exchanges. So can you just help us understand how these are different from each other?
Sure, absolutely. So, very happy to be here. I'm the global head of research at 21 Shares. At 21 Shares, We simply do crypto ETFs, so exchange rate products globally. We run about $8 billion with multiple products from Bitcoin, Ethereum, Solana, and even baskets as well. As long as, of course, there is market demand and a very strong research thesis behind these products. So these products are very simple. When you think about when you and I are investing in the stock market and we're interested to invest in an Nvidia stock or an Apple stocks or even like a basket of multiple companies like the S&P 500, so the 500 most valuable companies in the US, we're opening up a brokerage account or a bank account, and then we're investing through our broker into our beloved products. So 21Shares does the same for essentially cryptocurrencies. We make cryptocurrencies available in the stock exchanges so that on the same platforms that you're investing in Nvidia and Apple and the S&P 500, you're able to also have alongside the same system and portfolio also Bitcoin, Ethereum, Solana, and more crypto assets. So we've been the pioneer in the space for the last 8 years. We launched the world's first physically backed crypto ETPs, starting with a basket of the top 5, and then eventually Bitcoin, Ethereum, Solana, and what have you. And we're known to be the world first in the market to really provide easy access to the asset class for both retail investors as well as institutional investors, in a nutshell.
Yeah. So, Ellie, we understand. I mean, of course, most of the crypto 4 or 5 years back was all about retail sentiment. Retail is how it was driven. It was total FOMO out there. But for the last 2, 3 years, we are now seeing regulation catch up. We are seeing more and more interest from Wall Street into launching these products like ETPs, particularly.
Yeah.
And it is quite confusing for the retail investors. They still can't grab that. Okay, we understand Bitcoin is definitely one of the largest, among the largest asset now, still very below market cap of gold or even the equities. So why this sudden interest in these crypto assets from Wall Street? I mean, if I were a retail investor, how do I interpret this?
I think it shows that, and this is a great question, Sunil. This is a market where it shows essentially that we are at a interesting intersection between essentially the early adoption that was retail driven predominantly for the last, I would say, 10 years in the digital asset space to now having mainstream adoption. And the mainstream adoption really comes with various formats where people can have access to essentially this frontier technology, which is essentially blockchain and Bitcoin and the long tail of digital assets. And the mainstream adoption really comes along with essentially the systems and the formats in which traditional investors as well as retail investors are interested to invest in, but most importantly, because they have a compliance mandate to only invest in essentially regulated investment vehicles that they invest in the other asset classes like gold and precious metals, as well as equities and bonds. So that's why right now, we have only 700 million people around the world that do have access to the cryptocurrency space, right? And that's the equivalent of where the internet was in 2003. At the time, we had about 700 million people, but the use cases of the internet was quite limited, right? People were actually not comfortable to use credit cards to pay for flight tickets or even to send over a message over the internet. It was taking a long time because the internet wasn't as efficient as it is today. So retail investors, to respond to your question, should not be worried about essentially this adoption life cycle, because this is actually moving towards having a broader set of investors around the world that can safely access not just these investments vehicles, but also using the technology for, let's say, tokenization, right? Where you can essentially settle currencies and bonds and equities on blockchain rails instead of using essentially traditional rails, which is the whole point of tokenization. So I do think that, to respond to your question, the investors today that have been around for a while should certainly appreciate the fact that this asset class is not questioned to exist, but it's actually embraced for relevance, and it's embraced for disruptive technology. We're seeing tokenization, we're seeing more and more financial products from actually traditional wirehouses like the Morgan Stanley of the world. So I do think that this is a good thing for the asset class because this is expanding the pie. So think about basically where Facebook was in 2003, in 2004, and 2005. Essentially, you don't want Facebook to just be used by Harvard students, right? You want it to be used around the world. You don't want WhatsApp to be used just by a handful of people that are not connected to the same, let's say, telecommunication networks that you're using. You actually want to communicate with people that are all around the world to make business for your own podcast, for example, right? So this is expanding the pie, and this is a good thing for the asset class.
So, Ali, this leads to a very natural question, of course, even. And
Sure.
coming from a space of retail investors, you can consider myself a retail investor. So, this leads to very natural question that today so many options are available to buy Bitcoin or Ethereum directly from these
Yeah.
exchanges like Coinbase and Binance. So, what's the difference when somebody is looking at these ETPs? If I can buy directly Bitcoin of the exchanges, why should I even research or try to buy an ETP?
So I think there are, I would say, two sets of investors. So you have essentially the traditional finance investors that can only invest in these investment vehicles by
Mhm.
regulation and compliance. So they cannot open a crypto exchange account like a Coinbase or a Kraken to
Okay.
essentially invest in this asset class. So they are
Mhm.
prevented by compliance requirements, right? And
Mhm.
we're talking about, some of the largest, private banks and family offices, or even pension funds and insurance companies that hold combined trillions of dollars in total assets, right? So that's basically segment number one, I would say, institutional investors. Segment number two is people like you and I, but we have a very different risk profile than others. So, for example, some investors are fine to have gold bars under the mattress.
Mhm.
And if they're using insurance, good for them. If they're not using insurance and there is a natural disaster in the house, that's a major problem, right? So for the retail investors, they are retail investors. They are not comfortable to have the equivalent of gold bars under the mattress for Bitcoin, Ethereum, and the long tail of crypto assets. So essentially having their cold storage solutions in their house and
Mhm.
dealing with the keys and the basically the recovery mechanism of these keys, etc. And that's why some people actually lost some of their keys in, unfortunately, dumpsters, and they're trying through law to actually retrieve them in the UK as well as in the US. And I heard about that story, which is quite crazy. So there is this set of investors here that are not comfortable to have, whether it's a small amount or a big amount of digital assets under the mattress, and they would prefer to essentially invest in a fully backed ETP or ETF, where
Mhm.
essentially, let's say, and that's a random number, that's not the exact number, and certainly not financial advice for your audience. But let's say, for example, you buy 100 shares, right, of an ETP through your bank or brokerage account. You're going to have, if, for example, 100 shares represent, let's say, one Bitcoin, you're going to have one Bitcoin fully backed in cold storage by essentially qualified custodians that an
Mhm.
issuer like 21Shares will be using. So you don't have to deal with the private keys. You don't have to think about, the insurance mechanism and all these different aspects that really give, to some extent and to a large extent for some investors, a very big headache, right? So long story short, people have a choice, and the ETP is a choice for them, while for others, it's a requirement for institutional investors, right? So that's why it's a relevant way and an open access to this asset class that is alongside any other solutions out there, whether it's like a Web3 wallet like a MetaMask or a Phantom, or directly, of course, through traditional crypto exchanges like a Kraken or a Coinbase and what have you, right? So it's either a choice or, of course,
Mhm.
a requirement for some of these investors.
So, Ali, I'm sure a lot goes behind, and there is a lot of hard work involved when you create and make any ETP live for
Yeah.
trading. But I wanted to ask you that which is your favorite ETP? Is there any story which you particularly like about an ETP and you would like to share with the audience?
um, I don't have any favorite ones per se, but I would say the one, of course, that is representative to the asset class is Bitcoin. It's the major asset. That's the first asset that I discovered 11 years ago when I
Okay.
was finishing up my master thesis in international finance. I actually had a class in cryptography at the time, and the professor was a former soldier who discovered Bitcoin in Afghanistan when he was serving there. And the soldiers were saying that you have to learn about Bitcoin. It's a very interesting
Mhm.
asset because it's both like a technology asset, so a risk on asset, as well as a risk off asset as a hedge against hyperinflation and economic crises that we could experience in places like Lebanon or even right now in Iran or in Ukraine today, etc. So he went on to teach about the benefits of Bitcoin itself, especially in these contexts, but most importantly, the deep dive technological aspects that makes Bitcoin possible today thanks to blockchain technology. So ever since I never left the rabbit hole. So that's why I would say Bitcoin is a very special asset in my very own opinion for this matter, because that's the first one that I discovered. And I still think that there is an untapped market for Bitcoin to
Mhm.
expand its adoption life cycle. There are places where it's forbidden today, of course, to have access to Bitcoin, like China, for example, which is a ban that happened 6 years ago. That at 21 Shares we were able to actually spot ahead of time because we interviewed so many miners around 2020 to understand essentially the state of mining at that time, and many of them were leaving actually the space from China to places like Kazakhstan and Uzbekistan, as well as the US, to get to a better place to mine Bitcoin more safely. So this is something that we're able to see and pioneer. But I would say because we have a very strong, research-driven way of launching products, while also at the same time paying close attention to our clients, understanding what they want to actually buy, what are the needs that they have for their very own portfolios, how can we provide the best research ahead of even launching a product so that they can be prepared with education, because that's exactly what we do. There are
Mhm.
many, of course, products that we're incredibly proud of, whether it's launching the world's first Solana product or the world's first hyperliquid product, which is today the largest derivative marketplace to trade even like oil, silver, and gold, as well as crypto assets like Bitcoin and Ethereum. So super proud of everything that we've been able to do for supporting education for our clients, as well as building innovative products ahead of time and ahead of our competitors.
Awesome, awesome. I was sure there is a story because when you see somebody like you who has done achieved great things in crypto, there is
Thank you.
always a story behind it. So, Ellie, we move to our next question. So, whenever we see these updates that 21 Shares has launched a ETP product around a particular cryptocurrency, it's a very big news for retail investors because they can basically kind of get an idea that this crypto is of interest, let's say, for the institutional side of things or institutional side of investors. So, what goes into selecting a crypto asset for an ETP? I mean, can you just help us? Can you just help the audience to understand that, okay, this is what the process looks like, and this is what ultimately leads to the selection of an crypto asset for a particular ETP?
Sure. I mean, the first thing is regulation, right? By regulation, there are requirements in multiple jurisdictions where we have to look at, the custodians, the exchanges where the asset is listed, the volumes, the market depth, etc. So that's basically regulation as well as infrastructure. Number two is our research thesis, right? We really want to understand the addressable market and how big, essentially, the vertical in which a specific crypto asset is servicing, how big this could become, and what kind of valuations in the long run, because we have always a very long view on this market, how far this valuation could go, and why specifically this crypto network. We're not just looking, of course, at the fundamentals, but we're also looking at the technology, the team behind it, to understand, for example, their previous backgrounds, what they were doing before, whether they have even like a criminal background, which is incredibly important to understand. So that's really on the fundamental side, on the research side, to have a thesis on how big the market is, and then looking at more closely the fundamentals and the technology behind it, as well as the team. And then thirdly, we're also, of course, asking several clients that we have to test the market demand and where we are right now. Many products, of course, that we could be launching are ahead of market acceptance, right? Like, for example, our Solana product, which was the world first at that time, but certainly not a obvious trade back in 2021, and then became the largest Solana fund in the world at some point. So I do think that we have to, as a customer-centric organization, make sure that we understand the journey in which our clients are, what type of clients would be the first buyers, and then how do we basically grow the pie with basically other type of clients that would come in later as part of our educational campaign to really support them with information and educational papers on the themes, the sectors, as well as the broader asset class. So that's why usually you could see, Sunil, that we don't just provide content, but we also pioneer, for example, real-time dashboards so that they can see in real time the earnings of these different crypto assets. They can actually track in real time the revenue growth, the user growth, the number of users, the number of transactions, which really matters for you to understand whether a investment is getting adopted and growing. And then the second thing that we do really well beyond just providing written content is to really be out there for the clients and spending time with them through video calls or even physical events or one-on-ones to really support them as much as possible. Of course, it's a long journey. We have to have a long view, but most of the questions that we get from the clients are very similar, to be honest. They're always asking, what are crypto assets? Are they all the same? Well, no, they're not all the same. Bitcoin and Ethereum are very different from one another. And that's why we also pioneer frameworks, like, for example, a classification system that really helps investors to just like bucket the different crypto assets in sectors and industries so that they can separate them, understand the valuation, understand the role in the portfolio, and most importantly, then looking at whether they want to make an informed decision by themselves.
So, Ellie, if today, let's say, an HNI or a family business wanted to purchase these ETPs, where in the world today we can trade these? Is this only in US or outside of US as well?
So we're listed in several geographies in the US, in the European markets, from Switzerland to the UK to France to Germany. We're also listed in Brazil and some places in the Middle East as well. So yes, we are expanding several markets as well moving forward, but I would say mainly Europe, Brazil, and of course the US.
So, Ali, I understand that you are day to day engaged with the
Yeah.
large investors, with people with actually deep pockets who are choosing these ETPs. And of course, they might be having debates around the native crypto asset as well.
Yeah.
And it will be a very interesting debate or dialogue to have with you, that what sort of interest from what type of investors you are having. Are these all kind of Wall Street investors or family businesses, or are there some crypto investors as well? So, I mean, is it an intersection of crypto native people and Wall Street, or do you see only right now large institutions taking part, participating in these ETPs? How does the investor profile look like for ETPs?
It's a great question. I would say the breakdown is 80-20. So 80, I would say, institutions coming from family offices, private banks, hedge funds, sometimes even high net worth individuals, to a very small extent, pension funds and insurance companies, because they will be coming in much, much more later. And then the 20% part are retail investors, high net worth individuals, family businesses, to your point. As well as to a minority, I would say, is the crypto native investors, because most of the crypto native investors already invested in the asset class a while back, even before in the US, for example, crypto ETFs existed. So they had different venues to get exposure directly or indirectly. But many of them, as of course the net worth exponentially grew, now they don't want to deal with the private keys and the recovery mechanism that comes with it, or even the insurance. So some of them are, of course, interested to park into ETFs and not think about whether they would lose the keys or not.
Yeah. I mean, so for these institutions, what is their reason for this interest? I mean, are they just exploring the waters, or are they looking for actually good yields? Are they looking for a safer hedge? What might be the reason that they are interested in ETFs as a product?
It's a phenomenal question. I wouldn't say that the ETF is the main interest, right? Because as I told you, this is a requirement, right? This is not just a choice. This is actually by law. They have to buy exchange traded products or exchange traded funds or exchange traded notes. There are different variations, but I would spare with you the complexities. But there are two, I would say, drivers or forces in this world that justifies the demand for digital assets. So number one is the fact that we are living, and you're actually experiencing that yourself because now you're right now, I believe, in India, but you are actually usually based in Dubai. So we are living right now in a fragmented world with heightened geopolitical conflicts. And there is essentially a need, and you could see that, of course, with the success of gold as an investment for the last 12 to 18 months. But there is a need for a non sovereign and international and censorship resistant asset like Bitcoin. And that's basically the force number one, which is fragmented world, heightened geopolitical conflicts. People are concerned over the weaponization of, for example, the US dollar. People are concerned over the currency debasement, so inflation. So they are looking at hard assets. So that's why you've seen the success of gold, of silver, of course, with the demand of AI, but also most importantly right now, especially for the last, I would say, month or so, the strong interest and understanding that there is a key place in a portfolio, diversified portfolio, within a small size for Bitcoin, right? That's basically force number one. Force number two is the fact that finance is becoming more digital. But becoming more digital doesn't mean that they're using the traditional rails. It means that blockchain rails are actually getting recognized for being faster, cheaper, and more connected with various counterparties together using the same rail. So that's why you've seen the demand for Ethereum or Solana, because essentially you're moving away from like waiting for a day or two for a settlement of your transaction when you're using a bank account to a near-term and instant settlement of transfer of value, thanks to basically the likes of Ethereum and Solana. So essentially sending value like a WhatsApp message, which is incredibly powerful. So long story short, there is a demand for essentially, from a physics perspective, for a non-sovereign and hard asset that is digital like Bitcoin. And then there is a clear understanding that there is a technological adoption and disruption that is happening before our eyes, thanks to the likes of essentially Ethereum and Solana. But there is, of course, a lot more blockchain rails as well, as you may know. And that's why, and this justifies, I would say, the investments that we see in these ETFs.
So, Ellie, you mentioned tokenization. I mean, and of
Right.
course, right now it is the next narrative, the bull scenario that everybody in retail has in crypto, that RWA and tokenization is the next big thing. But of course, we are seeing right now tremendous adoption when it comes to money markets, particularly like bonds, treasuries, even the stocks now. Uh, Not so much adoption when it comes to the hard real world assets like real estate, maybe, or maybe something more physical in nature. We are kind of missing that spot there. So my question was more around, first of all, ETPs, that are there certain ETPs which are now focused more on tokenization products as compared to just crypto assets like Bitcoin and Ethereum? And are there any intersections, or is there any research that 21 Shares and you are working on?
Well, it's a phenomenal question. So when it comes to the products itself, so yes, actually there are products that we have in our suite. Of course, this is not financial advice, that represent the clear intersection of traditional finance as well as blockchain adoption. And the one is, of course, there's Ethereum and Solana because there are many currencies like the
Mm,
US dollar tokenized on these rails. To give you a
mm,
number, last year we've seen $33 trillion in volume for US dollar stablecoins, which is
wow.
unprecedented because this is
Mm,
combined processing more than traditional payment networks such as
mm,
Visa and MasterCard. It's
mm,
truly impressive, and it shows again that there is a clear need for easy access to dollars around the world for many people that are suffering from hyperinflation and currency debasements. And we've seen that around the world in Turkey. We've seen that around the world in Lebanon as well, where people are affected by economic crises that lead to currency debasement, right? So that's why you've seen in all these different various places more need and more adoption of Bitcoin as well as stable coins because people are affected by hyperinflation or the inflation itself. And then the second thing is when it comes to the other products beyond Ethereum and Bitcoin and Solana that could represent the conversions of
mm,
tokenization as with blockchain rails is hyperliquid. So hyperliquid is essentially these derivatives
mm,
exchange where you can trade basically with leverage the future price of Bitcoin, the future price of any other digital assets. But interestingly, they diversified with real world assets. So you can also trade silver, oil, as well as gold directly on this marketplace. And you could see over the last month or so, when we've had heightened geopolitical conflicts between the US and Iran, as well as Israel, you could see that after the market closed,
mm,
actually we've seen billions of dollars of volume into essentially tokenized silver, tokenized oil, and tokenized gold on Hyperliquid.
mm.
And
Agree.
to give you a number, at some point, I believe the open interest, so the interest to trade silver or the interest to trade gold or any other precious metals, was representing close to, I think, 2% of
Mm,
the total open interest in even traditional marketplaces. So there was basically a benefit for many investors over the weekend to be able to trade because after market close, everything is closed shop. It's impossible for people actually to trade. They have to wait, on Sunday to be able to trade futures, and then on Monday to trade spot. So that's why what we've seen is that there is a clear convergence before our eyes of blockchain technology being adopted to trade assets that are not accessible in traditional marketplaces. And
mm.
Hyperliquid has been, of course, alongside Bitcoin and Ethereum, one of the best proxies to have exposure to tokenization through our product suites.
So, Ali, you have often shared your opinions about utilizing the tokenized crypto assets or the tokenized assets in general as a collateral for benefiting DeFi and other decentralized pools. You have often commented on it, you have often debated about it. And I wanted to understand that once we are, of course, seeing a lot of interest for trading these tokenized entities. I mean, whether it is oil or whether it is equity and even stocks,
Yeah.
is there an interest, or do you see in the not near term that we might be able to utilize them as collateral for borrowing or lending stable coins, just like we do for, let's say, real in the real world today? If I have a house, I can kind of collateralize it and get a loan out of it. Can we do the same for tokenized assets in the coming days?
Yes, it's actually happening at a smaller scale on various lending marketplaces where people can actually use their existing trading positions to then borrow against it and do other things with it. But I do think, to your point, I'm looking forward to see beyond just trading how collateral usage could be for buying a house, could be for buying a car, or even paying for school, school. Schools for kids, etc. I do think that it would be very interesting to see how this is connected to the real world. Of course, this will be coming in with regulation. I would say, especially in traditional banks and brokerage businesses, you're going to see first ETPs or ETFs being used as collateral first, rather than just like tokenized products, because it would take a while. And of course, as you've seen with the various hacks that the DeFi space, the decentralized finance space experienced over the last few days, of course, the need for strong cybersecurity standards is going to be key for people to feel safe, to be using tokenized products as well. But I do think at some point this is going to happen where essentially the blockchain rails are going to touch also the real world for even buying like houses or cars or any other items or materials that people care about.
So, Ellie, while we were researching about you and your work, a very important point came out. You actually pioneered the use of proof of reserves for your ETP product. And I guess in the ETP world, it was the first one to do that. You utilized, I guess, Chainlink to kind of
Yes.
create a reserves for the 21 BTC product. What's the story? I mean, I'm sure that you were somebody new on the block and you just kind of suggested this idea that let's provide people a complete transparency. So is there a story behind it that people should know about? How did that come about, you know?
It's a cool question, and thanks for raising this. Indeed, we actually pioneered proof of reserves for actually our Bitcoin ETF in the US, arguably, and the reason is because um, we wanted to provide extra transparency for multiple investors to know that the assets are fully backed and or in custody, without revealing our very own addresses for compliance and security reasons that I'm not going to delve into. But essentially, we want to always provide innovative products for our investors beyond just, of course, these financial products. But essentially, alongside that, how do we essentially strengthen the confidence of the investors and the trust? How do we continue to earn the trust of our investors with innovations around our financial products and around the business lines that we have? And that's why, of course, what we did is really partner with Chainlink to provide essentially a real-time proof of reserves of where the assets sit and how much of them in third-party custody with Chainlink.
Yeah. So there is a lot to speak about, I'm sure. I mean, you are one of the most, I would say, crypto friendly voices out there in Wall Street, if I can say that. That's what came out of our research, and our team told us that he's the right person because he will give you a very raw and honest feedback, and not kind of try to package it in some other way. And so far the podcast has been going amazingly well, because whatever you're telling is coming basically out of experience, it's coming out of humbleness. So thanks a lot as we're progressing here. I do have few more questions and then we will wrap it up. I hope
Sure.
that is.
Sounds good. Thanks for the kind words.
Yeah. So, Ellie, I'm sure that when we talk about any kind of an adoption, it's always either USA, it's either maybe some European markets or maybe something in China.
Yeah.
Are
Yeah.
there any particular, let's say, underestimated markets where you're seeing some phenomenal interest, or you're seeing outlier, let's say, kind of an adoption story where you think that, okay, this is kind of an underrepresented or underestimated market, which tomorrow might really become one of the largest crypto markets in the world?
Wow. It's a great question.
So, for example, I mean, to just add context, when we talk about crypto adoption, the story that everybody in crypto who has actually worked in crypto, they already know this. I mean, that Africa is a very big market, because if you see transactions in the early days, even
Yeah.
we a lot of people in Africa who are our colleagues, even Southeast Asia, like Vietnam, Indonesia, even
Yeah.
India, these countries were very faster to adopt crypto. They were quite fast because there were already so many pain points in
Correct.
remittance, in
Correct.
accepting your salaries, and people were suffering because of it to a point. I can
Correct.
say that. And today, When we send our colleagues in Southeast Asia or Africa salaries, it's a matter of, let's say, minutes. We just use MetaMask or even Binance or even some exchange, and they receive these salaries just within minutes. And I'm sure when it comes to even institutional adoption, they are also looking at it. So that's what I wanted to understand from you, that now sitting at such a big firm in Wall Street, do you see certain underrepresented or, let's say, underestimated markets coming into picture in the coming days, which people are totally neglecting or ignoring right now?
I do think that in emerging markets, specifically, we've seen more adoption of crypto assets.
Mm-hmm.
The reason is because, as mentioned previously with you, there is a need for access to US dollar payments and US dollar transfers, especially for the diaspora. So basically, people based in countries like the US or countries in Western Europe that can send money over to their families overseas.
Mm-hmm.
And one of the most underrated places where we could see essentially more adoption is Argentina in Latin America. I do think that we are
Mm-hmm.
going to see a lot more people not just using the technology, but also entrepreneurs trying to
Mm-hmm.
solve local problems and raising venture capital money from very serious venture capital firms to be able to solve their existing problems. And I do think that there will be not just innovation in payments, because that's the first thing that you may think about, especially
Mm-hmm.
for remittances. But I do think that there will be also innovations around how to connect telecommunication systems with blockchain rails, so that, for example, if you want to use, let's say, satellite networking, you're able to pay that subscription with stablecoins. You're able to use that as well in a very interconnected way. So, for example, you can run your own server, your own hotspot to provide, let's say, telecommunication servicing. And that's exactly what Helium is doing in crypto, right? So basically, you can be your own internet connection, essentially. So
Mm-hmm.
running your own server and then sharing that within the network so that people can have access to that. And I do
Mm-hmm.
think, because in places like this, sometimes due to geopolitical conflicts or even local political conflicts, people can
Mm-hmm.
be platformed or be removed over the internet grid. We've seen that a lot in places like Uganda, for example, in Africa. I do think that there will be innovations around how do we create essentially an alternative network that looks like the blockchain architecture and can leverage blockchain payments, so that we can have access to a communication that can help us to have access to global commerce, to have access to any services that would be beneficial for the local audiences. So I'm expecting actually more adoption on both the entrepreneurship side as well as the end user side for both payments and these kind of really interesting telecommunication products.
Yeah. So, Aggie, last question for the day. What is your prediction about Clarity Act? I know you've asked it a lot, and I understand that a lot of crypto retail sentiment, as well as I'm sure institutional side as well, is kind of debating it right now in the real time. So I
Right.
wanted to get your thoughts as well on it. That, I mean, first of all, how important you think these regulations are, and secondly, do you really see them happening in 2026?
I would say this likely for now, not highly likely, but likely for now, happening in 2026 for the Clarity Act. And for your audience, the Clarity Act, in a nutshell, is essentially the classification of cryptocurrencies, whether they are securities or non securities like currencies. And then once you have the framework and the classification, which essentially jurisdiction body in the US is going to basically oversee them. Is it the Securities Exchange Commission, so the SEC, overseeing securities, or is it going to be the CFTC overseeing essentially commodities, right? So I think this is important because it brings clarity and it brings transparency for the entrepreneurs to be able to, when they launch a token, when they operate in the US, or if they want to expand in the US market, which
Mhm.
laws they should actually apply and comply with, what kind of licenses would they need, If they're launching a product like a DeFi product, is it going to be considered a broker dealer or not? These are very important items. And the reason is because we moved away from regulation by enforcement in the US to now regulatory harmony and cohesion with the crypto assets class. So I do think that this is incredibly important. This is a turning point. You have to think about it as essentially the building block for getting to mainstream adoption, getting to
Mhm.
millions of people that can actually use the technology around the world without them realizing that they are leveraging a blockchain powered application on their iPhone or their Samsung. Right. So this is where we are right now, and that's incredibly important. And I do think that for now, likely to happen in 2026, but we have to watch this space.
Yeah. Thank you, Ali. It has been wonderful so far. I'm sure our audience will today kind of learn. They already have learned a lot about ETPs as a product, as a crypto investment choice right now, and I'm sure that there will be some research that follows this up, and there should be some more interest around ETPs as an investment in the coming days from our audience. So thanks a lot for providing such good answers, and particularly, I mean, the way, if I can, I'm just kind of noting everything down. The way you have kind of helped people understand that ETP is more of a compliance requirement than something being just launched on an exchange or something like that. It is something that is packaged so that institutions can easily, comfortably invest, and it
Correct.
should be seen as a very positive development in all. If a retail investor is seeing today, it is nothing to be afraid of or thinking that, okay, now this is something we don't understand, so let's stay away from it. So thanks a lot for clearing that up, and I'm sure people will learn a lot when this podcast goes live. So thanks a lot, Ellie, coming today and spending your time with us.
Sunny, thanks for the time. It was honestly awesome. I really enjoyed the conversation, and more to come as well. And for the audience, if they want to learn more about 21 Shares, we're available on our website, 21shares.com. We've got the Insights tab as well, where they can find our latest research. They can sign up for our newsletter, where over 20,000 people are reading our research every single week.
Mhm.
But yeah, feel free to reach out as well. I'm available. Thank you so much.